Good afternoon, everyone. Once again, you have Dan Nentel and Alex Pars with Ironwood Financial. We are missing our beloved moderator, Robin Dolezal. He's out taking care of some family things that are all good. Want to let you know, again, today is July 17th, and just so you're able to keep track. And I think I might even mention we are live, but we are recording this today. And so if you have any questions at the end, by all means, reach out to us via email or go to our website at ironwoodfinancial.com. Alex, what's been going on? Have you been doing any fun? I never get to see anymore.
I noticed, yeah, you're looking kind of fuzzy there.
Yeah, my COVID beard, I succumbed to it. I don't think it'll stay very long. It's kind of itchy.
Yeah. We did some fishing, which was kind of fun. Caught some fish, cooked them up for dinner. So that's good. Trying to stay away from people, keep the kids from going stir crazy. Yeah. Have you decided on what you're doing for school for the kids?
No, we're still waiting to hear. Jules and I are voting very much for them going to school just for sanity reasons, but we'll have to see where that ends up.
Yeah, we're in the midst of that debate. It sounds like the online version, they don't actually do a whole heck of a lot of teaching, and it's parents teaching pretty much. So
it's an impossible job for everyone. I know my daughter has told me, who will be a senior, and I feel so terrible for the people that graduated in 2020, or my daughter who's going into her senior year and hopefully celebrating, ending high school, and she's talking about doing online school the first semester, hoping that she can go back to school second semester. So it's everyone's thinking about this.
Yeah.
So Alex, in the stock market, what I think if I'm watching this correctly, this week we're going to head for some modest weekly gains. The things we're hearing about mostly are obviously the increased COVID cases, which is probably affecting some consumer confidence. And then you're hearing quite a bit about people getting concerned about the fiscal stimulus, making sure it happens, because this is a big month for us to end up. What are you seeing out there?
Well, and once again, it's interesting. There's been a lot of negative data, which is sort of a good thing at this point for the stock market if all you care about is stimulus package, which since, that deadline is coming up, we've got about 2 weeks. And if, what is the number right now? 17.5 million continuing claims with another 1.3 million claims last week. What's interesting, though, is they keep talking about these claims are declining very, very slightly. What's interesting is if you don't seasonally adjust them, we actually had an increase in continuing claims last week or 2 weeks ago. So that means that.
Yeah. I was just reading that's 17 weeks in a row of more than 1 million people applying for new claims of unemployment.
Yeah, I mean, that's shocking. I mean, the articles I were reading is, we got down below 2 million pretty quickly, and we've been really stubbornly hanging at 1.5 million. And that number is a very scary number to stick at. Again, I think it was, what was it? The largest we got during the Great Recession was 4 weeks totaled 1 million. So we're breaking a monthly record a monthly count every week. So.
And you said something else that I want to make sure doesn't get too glossed over, which is, so you said 17 point some number of million people, if the government doesn't extend the stimulus package for that unemployment increase, will lose $2,400 a month of income.
Yeah, basically.
August 1st.
Yeah, and then there's also the other group, which is kind of an interest, and I don't know how to count this group, but there's the people who don't qualify for state unemployment. So those are the gig employees, the self-employed, the contractors, so on and so forth. If you put them together with the other group, you get a total of 32 million people claiming unemployment benefits as of right now.
32 million people are getting a check every week. 32
million people at this point, yeah. And quite a few of those could lose that if they don't extend the benefit. But let's be honest here, they have to. They're not going to just turn it off. And they're not going to do it, as we've talked about. They're not going to do it till the end of the month, right?
Yeah, just like the TARP vote in 2008.
Yeah.
Now, does it seem cold or heartless for me to kind of hope they lessen the amount so that it maybe incentivizes people to go? I mean, my daughter has a job that historically was used by people that are post high school, and she got this job that pays a really good rate because it wasn't worth it for people to go take that job because they'd make more money to be unemployed.
Yeah, it's not heartless. I mean, well, okay, yeah, you're cold-hearted. No, it depends on what's going on with the work environments at this point. And the work environment is getting scarier across the country, and particularly in Arizona. So if there's a lot of shutdowns or, hey, you're supposed to stay home, then yeah, I'm kind of for paying people to stay home if there's a real reason for them to do it.
That's a great point, which is a perfect segue. I mean, I don't know, this is an increase. I don't know when the last time it was this high, but we had 75,000 people contract COVID yesterday, which is a high over, and I don't know when it was that high, which is causing the market to really kind of do nothing. Right now, we had a record low volume of stocks being traded on this Friday, which Fridays are usually lower. Summer is usually lower. But the fact that people are locked in their house, so the sentiment, the consumer optimism that the University of Chicago tracks hit a pretty good low right now because people are very concerned, that California, Arizona are going to shut down, and it's going to really slow the pace of the economic recovery. It's, there's no solution to this, I don't think.
No, I mean, that's definitely a concern. Keep in mind what we talked again a couple weeks about was the fact that all the cases were in one place, more or less, 50,000 in March or whatever a day, and now we're up to 75,000. We could get to a few 100,000 a day, and it still wouldn't change life too much, as long as they're not all localized, right?
I actually saw a stat yesterday that those of us in Pima County, which is where Tucson is, actually had a pretty low day yesterday. But unfortunately, Maricopa, which obviously a much more dense, huge city, had a record day. So you're right. We'll have to see how dense and what happens. And I did notice that people are concerned about it. I did have a conversation today with someone who's actually going to leave a big city and move more rural, just because they're kind of sick and tired of being locked in a dense big city. So
yeah, I fully expect that to be happening. I've heard anecdotally stories about it, but haven't seen too much firsthand experience.
Interesting. So now in the stock market again, we're in what they call earnings season. So we get to see how well everyone performed in Q2, which obviously is not going to be an optimistic scenario, considering we were shut down for a great part of it. But interestingly enough, the projection based on what happened is that if you just take add up all the S&P 500 companies, so the 500 largest companies in the United States, the projection is that we will see a 44% decrease in company earnings. Now, is that baked into the stock market? Normally that would be. That's not good news.
Well, no, that's obviously very bad news. It's the worst news we've had since, again, the Great Recession. But you've got to put into perspective that these earnings are really throwaway for most companies. The theory was, I think we've learned a lot as a country as to how to do a lockdown and what's the important thing that we need to do. I don't think we're talking at all about closing retail stores again, right? We closed everything, which obviously is terrible for the economy. Now we're closing a few select things and telling people wear a mask when you do these other things, which should not impact sales and revenue quite as harshly. So we shouldn't see quite as bad a number as we saw last quarter. So last quarter should be really just tossed out in terms of earnings. What's more important is
the stock market appears to have done that.
Yes, except for those companies like Netflix, Amazon, all those companies that we expected to do wonderfully. What's that?
The FANG companies, Facebook, Apple, Amazon, Netflix, and Google.
Yeah, so if they do poorly under those scenarios, I expect them to get hit pretty hard, because if all you can do is stay home and watch Netflix and Netflix's earnings disappoint, now that everyone's itching to get out of the house, that's not good for Netflix.
So and obviously Netflix got hit pretty hard by not hitting their estimates.
Yeah. So
now you said something, and I'm going to go off, going to throw a little curveball towards you, but you talked about retail sales. the market this morning, one of the headlines that I read on Market Watch was people are pretty excited that retail sales went up 7.5%.
Mhm.
But earlier, when you and I were talking, you threw out something that kind of was a wow factor for me. I don't remember the exact stat, but so talk about, should we be optimistic? Is the economy recovering? Is that what's going on?
Well, the economy is again recovering from its worst at the moment, and obviously that depends on what happens with the case count overall. But the statistic we were talking about was that only 32% of people in this one poll said that they had gone out and shopped in person for non-essential items. So basically, another way of looking at it is 68% of people would not shop in a store for a non-essential item. So they were shopping online only.
That floors me. But now, what about the 7.5%? So that's just really, it had to come up from zero, I guess,
Yeah.
for the concept.
Yeah, and we saw 18% last month. So now 7.5% is, we obviously expected a slow. And the question that the question is, the headlines are always putting out these big numbers, and we know these big numbers are coming. Again, 1 turning into 2 is 100% growth, but 2 is still terrible if it used to be 10.
That's true.
And a lot of these numbers are forgetting that, look in perspective to a year ago. And a year ago, yeah, we're up 15% from last month, but a year ago we're still down 10 or 20% on sales. And that's what we're talking about when you talk about these, profits projections.
And so one of the things that I think is interesting, and you see this, but maybe you don't understand, so I'd like you to explain it. But so 55% of the S&P 500, so about 280 companies have decided they're no longer going to provide us with an earnings guidance.
Yeah.
What does that mean?
Well, normally you say, here's what we did last quarter, here's how much we sold, here's how much profit. And next quarter, or for the year, this is what we expect. Okay, and right now they're saying, we have no idea. Which makes it kind of fun from an investing perspective, which is to say, all right, we're supposed to be using profits and, guidance and whatnot to determine whether a stock is a good buy or not a good buy. And meanwhile, the people who run these companies are like, we have no idea what's going on.
So I like the way that you said it makes it interesting. I mean, Bloomberg today, I was driving in and the commentator said, and he was some big hedge fund manager, and based on what you just said, he said, if anyone tells you they know what's going on in the market, they're lying. And so, I mean, it's confusing right now.
No, it's definitely all about, I think it's a combination of the Fed and, day trading. We're seeing, again, the 1999 phenomenon. And you see these stocks just going through the roof with no valuation basis. Okay.
Yeah. Next week, it'll be interesting when the banks announce their earnings, because with all the stay-at-home day traders, I heard that Goldman Sachs anticipates that they had a record amount of trade revenue, so it could help their earnings. Maybe they'll have a good report.
Oh, I think banks will actually do pretty well. And that's, one of the reasons we did some bank buying earlier in the year or a couple months ago, which is, remember, they came out and they took these huge losses on Q1 and said, you know what, we think this is going to be terrible. I'm going to post an $8 billion loss because of that. And now, with all the money the government's been throwing around, there's not been a lot of foreclosures.
No.
You can't foreclose, right? And there's not been a ton of losses. So I think bank earnings are going to actually look very good for Q2.
So one last thing on the market, and that is David across the hall was showing me some graphs that were fascinating again. And we've kind of talked about this, but again, if you remove the FANG stocks, Facebook, Apple, Amazon, Netflix, and Google, and you look at my screen here and you look at the S&Ps down 1.5% year to date. If you remove those 5 stocks, which are different than we've referenced before, but the market's actually down closer to 9.5%. And so it's amazing how powerful those 5 companies have been.
And dangerous. I mean, because again, if we're talking Amazon, if 68% of people said, I'm only shopping on Amazon, I'm not going to stores during the pandemic, what happens next quarter or the quarter after that when people are over it and they want to go out and actually try on clothes again or hold something before they buy it? There's a lot of power to being able to see, touch, feel something before you purchase it. And that,
I was actually kind of surprised today. I've looked at this, but it seems like I didn't realize they had trended down over the last month. But if you look at small and mid caps, they're down closer to almost 19% year to date.
Mm-hmm. Yeah, no, and internationals. I mean, it's tech that's doing well.
Gotcha.
Tech's doing well, and the rest of stuff is still hurting quite a bit. And we'll see. And so there's still, with our buys, we're still looking for bargains. There's still things out there that once this passes or we just get used to it, whichever happens, then those should start to rebound.
Yeah, it should be a quick prosper on some of those buys. So last thing, Alex, which is kind of fascinating for me, and I know that, I'm actually in the process of talking to my mortgage person. I saw today that 30-year mortgage rates fell below 3% for the first time since they started to keep track. And I saw record amounts of the home sales are on fire, home builds are on fire, home remodels are on fire. Is that just, if you don't like it, you want to improve it because you can't leave your house?
Yeah, I mean, you were talking about your friend who builds pools, who before the recession hit or before coronavirus, he was worried about his business and wasn't sure what he would do. And then this has been the greatest thing ever for him. RV sales, the toys where you go out and play in the wilderness, you can't get them, right? Anything you want to buy that involves you going out to the national parks, I wouldn't be surprised if there's a big ski season this winter, right?
Oh, interesting. Yeah, except for where do you stay?
The Airbnbs, maybe, I don't know.
Right. So I guess the takeaway from that is to go buy toys is very expensive. To go buy a house is expensive, but you probably should consider refinancing if you have a mortgage out there.
Yeah, and I wouldn't be surprised to see rates drop down to 2.5.
Wow.
I don't know why, but that somewhere in my head I thought we'll see probably 2.5. But I mean that would be that's all part of the Fed plan right there. I mean it's not because there's not enough demand for mortgages.
Right, exactly. Well, I tell you what, Alex, it was a pleasure getting to talk with you again. I'm glad to see that you were able to get the kids out of the house and do some fishing. And for those of you out there, remember, we're talking about a lot of different topics. But if you're looking to refinance, see a mortgage specialist, taxes and legal, see those specific professionals. And if you have questions about anything we talked about, please reach out to us directly or go to our website, ironwoodfinancial.com. And if you want to send this video on to people, again, it will be on Facebook at our Facebook page. Alex, thank you for your wisdom once again.
Yeah, good to see you. Have a great weekend.
Thanks, bud.
All right, take care.